Hey, hi everyone. Hi, testing, testing. Let me know if you can hear me loud and clear. You can see my screen. I've just enabled the chat box, so can somebody just talk to me in the chat box and let me know if you can hear me? Hello, Kai. Kai, Mario. Mario. Hello, hello. Oh, thank you. Thank you, thank you. We're just gonna wait 1 or 2 more minutes for everyone else to join and then we can officially start the webinar for today. Okay, hi guys. Let's start today's webinar brought to you by IC Markets. We're going to do a live analysis session today. What that means is I'm going to go into the live charts and I'm going to show you how I usually do my analysis. Please do not copy me blindly. Obviously, I am human just like you guys. Um, chances of me getting it wrong is there for sure. It's going to be there. Okay, so yeah. Okay, disclaimer. You guys already know how this works. Anything that I share in these webinars should not be construed as any form of trading advice, financial advice, any form of signal to buy or sell. You are purely here to learn. This is an educational webinar. Even though I'm going into the live charts, I'm going to show you how I do my analysis. It does not mean you should copy me blindly, okay? Okay. Hmm. Do we read through the disclaimer and then we can continue? Hi Alfred. Hi Eric. Hi Sasan. Hi Muhammad. Hi Josh. Hi Drums. Oh, Gems, sorry. Hmm. Okay, cool. So I'm gonna continue by introducing your host for today. My name is Cassandra. You guys can call me Cass. I am an investment analyst and a prop trader. I am from Everest Fortune Group, which is a research firm based here in Singapore. We have been recognized as the finalist for the best Forex and best equity research for multiple years running. Okay, so what that means is our team, we specialize in we specialize in backtesting, forecasting, researching the markets and understanding where the markets are moving and what works best for the markets. Okay, so you guys are in good hands. If you guys have any questions at all, ask me in the chat box. Don't be shy. You don't even need to feel like you are delaying the webinar or anything like that. Okay, so our agenda for today is the key approaches, cheat sheet checklist, and the live charts. So let me go through the cheat sheet because if you don't understand the cheat sheet, you won't understand my style of trading. Because ultimately, what I'm showing you guys today is my style of trading. Okay, ultimately, it's just my style of trading, and um, different traders will have different styles of trading. You are basically just seeing from my point of view. Okay, so that's why I say don't copy me. I can be wrong as well, right? I am human just like you guys. But although I am wrong sometimes, it's important to let you guys know that I am also a prop trader. It means that sometimes I'm wrong, but most of the time I am correct when it comes to trading. Okay, sometimes I'm wrong, but most of the time I'm correct. Okay, so this is the technique that I've been using. I've already looked at our setups from last week. Both hit stop loss. Okay, so that is a very rare week for me where both hit stop loss. You guys know that you guys are here every single week. I don't change anything. I do my analysis, everything. Um, okay, so yeah. Um, I don't change anything at all, and you guys can see it's very transparent here. Last week was one of the rare weeks that I had losses. Otherwise, every single week I come up here and we see the trades from the week before, and it's always in a win. Okay, so I don't have 100% win rate, and that's okay. You don't need to have 100% win rate to be profitable in trading. You just need to win more times than you are losing to be profitable in trading. Okay, so I'm a trend trader. That means I need to know where trend is going. Okay. Either it's an uptrend or a downtrend. I need to know where it's going. Okay. So how do I do that? I use a trend line or a channel to help me kind of narrow down the movements on the charts. For a trend line, I need three significant touches. So one, I know this is not touching, but yes, you get my point. Just pretend that it's touching. One, two, three. Four touches on the top, two on the top and two at the bottom when it comes to a channel. So let's say price is moving in the downtrend. I need the channel to be touching two at the top and two at the bottom. Okay, for it to be a legit textbook channel. Once I'm done with that, I pull out horizontal levels. It can be pullbacks, overlaps, swing highs, swing lows, Fibonacci levels, whatever it is that will help me find horizontal levels that will act as my entry, my stop loss, and my take profit. After I'm done with that, okay, so after I'm done with that, I look for any chart patterns where I just triangle, double top, double bottom. And I'll see if there's any depth or golden crosses, pulling out the moving average settings 250 to see where price is moving. Any natural moving average, stochastics and RSI to look for any bounces and divergences. And lastly, I'll look for correlations. Correlation basically mean that I'm using two separate charts to come up with a directional bias. Okay, so these are the three. What time frame do you start analyzing the market from? So I do a top-down approach. I start with a weekly down to the daily, and then I end up on the 4 hours. I end up finally doing my analysis on the 4 hours. Okay, the reason why I do weekly, daily, and 4 hours, it's because I am not so much of a day trader. I'm more like day to swing trader, right? If you are a day trader or a scalper, the time frame that you should be looking at is like the daily down to the 4 hours and the 1 hour. And then if you're really a scalper, you can even do 4 hours, 1 hour, and 15 minutes. So I recommend looking at three different time frames depending on how long your trades last and how long you need it to um how long you want to spend in the markets. So for me, I chose swing day to swing trading because I don't like to spend so much time sitting in front of a computer staring at the charts, worrying about my trade. So what I usually do is I do my analysis, I get in the trade. My trade would usually last like 2 to 3 days, sometimes one day, 1 to 3 days. Okay. Let's say it lasts 1 to 3 days. And that 1 to 3 days, within that time, I'm doing other stuff. So I've mentioned this many, many times. I'm also a business owner. I own multiple businesses actually. So I own multiple businesses. I don't have time to just sit in front of the computer and just wait for my setups on my chart. So the fact that my trade lasts 1 to 3 days gives me time to go and do other stuff, right? You know what I mean? If I'm just day trading and my trade is over for that day, then the next day I have to come up with another analysis. It's just the frequency of how many times you want to trade. But for me, I only trade once a week. Okay, so again, different traders trade differently. Different people different traders trade differently. It doesn't mean one is better than the other. It just what works for your lifestyle and your account size. So if you are someone who wants to grow your account fast, my style is definitely slow and steady, right? My style of trading is definitely slow and steady. You're not gonna see your account double, triple in like a week. No, that's gonna happen in like a year for me. Okay, slow and steady for me. I'm definitely not one of those rah hype it up people you see on social media. Okay, so once I'm done with that, it's either a breakout or reversal, and I'm basically done with my analysis. Okay, so let me just pull up trading view. Give me 1 minute. Okay, can you guys let me know in the chat box if you can see my charts clearly? Like we are all seeing the same things, right? It is all on TradingView. Okay, thank you so much. Thank you, Kai, for answering. Thank you, Eric. Thank you, Alfred. Thank you, Mama. Okay, cool. So thanks everyone for responding. Oh, I like it when you guys are talking to me actually, so that it's not so dry for me. I like the interaction. Ask me questions, guys. Don't be shy, right? Ask me any questions at all. Okay, so once again, very transparent here. If I win, I win. If I lose, I lose. So I'm looking at the chart, the setups from last week. Last week I took you guys on I do these webinars for you guys every Tuesday. So the last time I took you guys was 28. So on the 28th, I did say my forecast for ETH USD is that it is going down. Okay, I think that it is going up. I think it will eventually go up, right? I remember saying this. I think it's going to go up a little bit and pull back first, but I thought last week it was going to pull down first, at least all the way to the take profit, and then come back up. So we can see from the 28, this is the 28, okay? My forecast was if price breaks this red box, then the next place we can aim for was this. Nope, it ended up becoming a fake out. You guys see how this is a very clear, blunt, straightforward fake out. There was a support here, a support here, a support here, a support here. There is support happening there, and price just went out of this red box and just went back in again. So that was a fake out. I think that was a liquidity hunt. Liquidity hunts are things that are used by institutional traders to hunt for stops. Okay. Why do they need to hunt for stops? Why are they trying to stop us out? Like people like you and I, why are they trying to stop us out? Because trading is a zero-sum game. Okay, zero-sum game. That means if I were to win $1, someone somewhere in the market needs to lose $1, right? It's zero-sum game. There is no money being made out of thin air. Okay, so if I make $100, someone somewhere needs to lose $100. So if you are winning in trading, just know that someone somewhere is losing so that you can win that money. Okay, it's a zero-sum game. So these liquidity hunts or these stop loss hunts are normal. It's usually done to stop people out, or activate their sell entry for our case. Sorry, yeah, for our case, it's to help us to activate our sell entry. So now we're in for a sell, but price went the opposite direction anyway, and then ended up hitting our stop loss. Okay, so this way there was liquidity in the market, and then someone somewhere can win the money. Okay, so this did not work out. This is the first time in a long time that I've taken a loss, right? You guys are with me week after week after week, every single month, and rarely, very rarely, um, very, very rarely I've had to take a loss, but that's okay. Losses happen. Like I said, what matters in trading is not whether you win or lose. What matters is that when you lose, the wins need to be more. Okay, this is another one. So I initially planned for a buy. Let's talk about the 28th. On the 28th, we can see price moving in this very beautiful channel. I should have known that this was a trap, right? Okay, but it's hard to know because we're talking about EUR/USD. So the thing about EUR/USD, why I love trading EUR/USD, right? It's one of my favorite pairs to trade is because I find that EUR/USD respects technical analysis and respects textbook levels very well. So a lot of time when price is moving in this very nice channel, it usually continues to move in a very nice channel until it breaks out, right? So in this case, I didn't foresee that price was going to break out. I did say on the 28th to enter for a buy here. Sorry, don't enter for a buy here. Okay, I said that I would enter for a buy here. Okay, and I expected price to just go up from here back to the take profit. In this case, it did go all the way up to the take profit. Price eventually did reach the take profit, but before it reached the take profit, it hit our stop loss first. Okay, in this case, I have let me see if there was any way I could have avoided this. I mean, yeah, there was definitely a way I could have avoided it, but Um, I guess in this case, what could have been done better was the stop loss could have given the stop loss a bit more breathing room. So if this was slightly lower, right? If this was slightly lower and my risk to reward becomes 1 to 2, which is still not horrible, right? It's still not horrible. I would have missed price stopping out, okay? And I would have expected price to just go up from there. Or the other thing that I could have done better was that to put the entry here in the next stop. Okay, I'm gonna do a replay, okay, to here. Okay, so I'm just trying to see what I could have done better for this trade because for ETH USD, there was nothing I could have done or in terms of my strategy because it was a fake out, right? So fake outs, these happens once in a while, you just caught in the middle of it, right? But for this one, yes, there was things that I could have definitely done better. The first thing is I could have moved my entry a bit lower. Okay, I should have aimed for this swing low here instead, right? This swing low that links up with this area here. Okay, so I should have aimed for this swing low instead, but what I didn't do was I was aiming for here because I was trying to align price to where the channel was because last week the channel was aligned this way, right? Do you guys remember that? Right? So the channel was kind of aligned this way. So I wanted price to stay aligned with the channel, or I was aiming for price to stay aligned with the channel. But what could have been better for sure was to aim lower, a bit lower, where all these swing lows were. All of these swing lows here, 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 here. There's so many other entries here. Okay, so let's say I had put this here and I wouldn't have put such a tight stop loss, right? Because my entry is now so low. Because to avoid wicking, I would have put it a bit lower. And this would have been a even better trade, 1 to 3, I think. Yeah, 1 to 2.6. Not the best. And then this would have worked out. This would have worked out better. But again, it's okay to take losses. The point is just to come back, review where you could have done better. Review where you could have done better. And yeah, where's my wait, sorry guys. Where is the playback tool? Okay, that's okay. Just leave. Okay, so in this case, this would have been a way better trade. It would have hit the entry just nicely. It would have hit the take profit just nicely. Okay, so this, I would say directional bias was correct. The entry and stop loss could have been improved. Okay, so let's remove everything and then redo for today. I'm going to start with EUR/USD. Okay, so EUR/USD, like I said, the three time frames that I look at is the weekly, the daily, and 4 hours. But that's me. That's me, right? Because I'm just trading based on my lifestyle. I only want to come and trade once a week. Once a week when I do these setups for you guys, that's the one and only time that I trade. Therefore, you guys know that whether I'm winning or not, because I'm being very transparent, I'm showing you my trades week after week after week, right? So for me, weekly, daily, 4 hours. But if you are a day trader or yeah, if you're a day trader, you can look at the daily, the 4 hours, the 1 hour. If you are a scalper, you can go down to the 4 hours, 1 hour and 15 minutes. Okay, you can go down. I don't usually use 30 minutes when I was scalping. I always use this. And if you are you want to go even lower, you can do 15, 5, and 1, but I don't recommend it. Why do I not recommend it? Because the higher I am a full day trader. Okay, if you're a full-time day trader, you can look at anywhere from the daily 4 hours, 1 hour down to the 15 minutes, depending on how often you want to get in and out of the markets. Can I just find out why? Can you just let me know in the chat box? Is there a reason you chose day trading rather than swing, for example? Is it because you want to make trading your career or like you don't really have other things to do, you don't like I just want to find out, like when people say they're day trading, I just want to find out. I'm day trading because I come after work, I'll just look at the charts. Okay, so you do have like some of you do have like a job, a proper job, then after work you look at the charts. So you're looking at the charts right there. Okay, I'll tell you why I'm not a day trader anymore. I think it's too stressful. So you need to know that's why trading psychology is so important. No matter what course or where you learn trading from, I think the professionals like the professionals, they will tell you like the first thing you need to master in trading is actually trading psychology. So for me, trading does get very stressful. It does affect me emotionally. Like if I'm losing a trade too often or whatever it is, it just get very stressful for me. So what works for me is when I don't spend too much time on the charts and therefore I only trade once a week. It sounds like once a week is a very little, right? But on a normal month, I still end the week at negative positive 6% to sometimes positive 10%. Okay. Like you can be in the charts every single day or every single hour, and some of you won't even end up close to this number at the end of the month, right? So it's not how much you are trading, it is the quality of your trades. It is the quality of your trades. Okay. You can see that every trade I take, at least I'm aiming for 2.5. So if every week I get one correct trade, that's 4 weeks in a month, I end the month at 10% profit, right? If I get 3 weeks correct, three trades correct and one wrong, then I get 6% profit. Why only six? Because um 2.5 times 3 is 7.5, right? But I still need to minus the one loss. So I get about 6.5% profit. Okay, so again, it's not how many times you trade, it is the quality of your trade. Okay, so let's start with Euro, EUR, USD. I'm again just showing you my style of trading. I am just showing you my style of trading. Please do not copy me. I can be wrong, like we just saw. I was wrong last week. Okay, so for the longest time, right? I know it's not perfect. I know. Okay, we can adjust it. We can try to make it as perfect as possible. Don't worry, this is just a reference, right? It doesn't have to be so perfect because we are not doing the analysis on the weekly time frame. I'm just using the weekly time frame as reference of where I think price is going. Okay, so looking at this, we can clearly see that EUR USD on the weekly time frame has been moving on a downtrend since like what 2008, right? So this is a almost 20 years downtrend. This is an 18 years downtrend. Yes, it pulls back, but ultimately the direction is down. Okay, ultimately the direction is down. That is very important. The bigger time frame is what gives you directional bias. The smaller time frame is where you do your you find your entry, your stop loss, and you take profit. It's okay, but the bigger time frame is gives you that bias of where to enter and where to sell. Okay, so yes, I know sometimes it pulls back and goes up, but that's normal because price is constantly moving in a zigzag pattern. Whether it's zigzag to downwards or whether it's zigzag to the upwards, that's one thing you need to find out. So on the very big time frame, we know that the zigzag is going down, right? The zigzag is moving downwards. So the question now is it done with the pullback? Is it time for another drop from here? Okay, so let's go to the daily. So far, so clear. So far, so good. Anyone confused as of right now? Just like give me a thumbs up or something, those in the chat box. Everything is clear. Okay, good. So you guys are okay with the directional bias. Okay, can you guys see that on the daily, EUR USD is kind of like going sideways, right? It's kind of going sideways because I think a lot of people are also questioning, has EUR USD reached the peak, right? Has it reached the top? Look, if it's following this nice trend line, has it reached the top? Every time it touches this trend line, right? It touches and it reverses. It touches and then it reverses. Now it's here again. It's supposed to reverse. So now it's kind of like going sideways because I think people are still deciding whether it's time to reverse or whether they still want to go sideways a little bit more before the drop, the actual drop. So right now you can see this is very normal. Every time it reaches a deciding zone, it usually goes sideways for a bit because people are still undecided. They're still deciding if this is done or no. But I mean, based on my experience, I think the drop is going to happen very soon. Okay, and also because I do see kind of like a head and shoulder forming. Where's the head and shoulder? I clearly don't use the head and shoulder function very often. Huh? Where's the head and shoulder, guys? I've used it before. I know it's here somewhere. Okay, you know what? Forget it. Oh, there you go. Okay, so if I had to come up with a head and shoulder, I would say this is the left shoulder, head, and then a possible drop from here. Okay, or it doesn't have to be that ugly looking, right? It can be left shoulder, head, and then you see a drop. Okay, so that's just something that I see. It's still forming, so we cannot use that as conclusion. Another thing that I see is another fake out happening here. Okay, again, you see, like price was just moving this very nice zone, and then there's that fake out, that liquidity grab. See here, that fake out to stop people out. Okay, usually when this happens, it means that price is going to drop the other direction. Okay, usually when that happens, it means price is going to drop the other direction. Okay, don't quote me, I might be wrong. Okay, therefore, I have a directional bias. I know for a long term, the directional bias, for me at least, is actually a sell, right? For EUR/USD, I am anticipating a very big sell for EUR/USD. It's just that I don't know if EUR/USD still wants to go sideways, sideways, sideways. I don't know how long it wants to go sideways, maybe until September, maybe until October before it finally does the drop. I'm anticipating a drop. I just don't know when that drop is going to happen. So what I'm going to do now is just go down to small time frames and try to play within, yeah, within, let me see. I think this is a descending triangle. Yes, that is a descending triangle. Okay, a descending triangle usually forms and then it goes with a downtrend. You guys see that? Do you guys see that? I am not making anything up here. Okay, so yeah, I think I have the directional bias of a sell, but obviously the clearest sell is when the breakout happens here. That's a very clear start of the drop, right? But right now, I think it's going to keep hovering a little bit, hovering until I don't know when, until like maybe a few more months before the huge drop starts happening. And when you see that huge drop, we're talking about a very fast down trend, okay? Right now, it's going to keep going sideways for a while, right? Because we're just caught in that. We're just caught in that. So it's okay. We'll go down to the small time frames to hopefully find something. Even in the small time frames, I see a descending triangle, right? Right. I see a descending triangle. It's very clear. Okay. So there's two things that ultimately can happen because for me, what I'm seeing right now is not everything, but a lot of signs pointing down, right? There are a lot of signs pointing down. Okay, so what I usually do is either play the reversal or the breakout. But right now, because the trend isn't very clear, because price is just kind of going sideways, it could either break out right now here, we could pull back first, come and retest the top part of the triangle, and then continue down. Okay, so what I'm going to do is come up with two alternate scenarios that I think is going to happen. My directional bias is a sell, okay, that I'm not confused about the direction, right? I'm not confused with the direction. I just don't think that it's going to break out yet. I think eventually it will break out. I think eventually price will break this green zone. I just don't think it's going to happen this week, right? I think what's going to happen, especially in this small little part here, you can see price is just going sideways, right? You can see price is just kind of going sideways. So it could continue going sideways for now. So what I'm going to do to be very safe, right? To be very safe is an entry here if it breaks out for a sell, okay? And an entry here for a sell as well. So the sell could happen at either point. Why am I not calling for a buy, right? Why am I not calling for a buy? Because technically, if price is going sideways, if it reaches here, technically it's supposed to go back up again, right? That's the entire idea of like moving in a rectangle. That's the idea of it. Why do I not go for a buy? Because it's going against the directional bias. If price is moving in a downtrend, yes, I can play. My gosh, how do I do this? Okay, I can play this movements here, the up, but why don't you just play the correct direction, no bias of down? Because you know, when you're in the ocean and the wave is pushing you towards the shore, you don't want to swim against the ocean. You kind of want to go with the flow of the ocean, right? You want to go with the flow of the ocean. It's the same with trading. You can swim against the ocean, but you're going to have a lot of resistance, right? You're going to feel tired. So why don't you just follow the flow of the ocean, which in this case is many things are pointing for it to be a sell, right? Many things are pointing for it to be a sell. I could be wrong. Again, I could be wrong, but what I'm seeing is a sell. So what I ultimately want to see is a breakout happening here, which could happen anytime soon, to be honest. It could happen anytime soon. If a breakout happens here, I'm going to enter here and then I enter for a sell. Okay. Ultimately, I'm more biased to the breakout rather than the reversal because the reversal, if it reaches this top here, right, it reaches this top here, I'm going to have to question structure a little bit. Okay, because if it reaches the top here, I don't know if it wants to do a fake out. I don't know what it wants to do from here. It might want to revert, but I'm more biased for the breakout to happen. Okay, so if I have to come up with something, this would be it. Usually I aim for swing lows, but I actually want the trade to not last too long in this case. So I can go down to the small time frames. Okay, so I'm gonna scratch the pullback because although there's a chance that's gonna happen, I think the higher probability would be not that it's higher probability, the one that's lower risk. The lower risk setup is a breakout. Okay, so I need price to break. Risk reward isn't great, to be honest. It looks like a 1 to 2. Yeah, it is a 1 to 2. Okay, depending on when you get in, obviously if you get in at a better price, it'll be even better, but yeah. So what I need price to do is number one, break out here. It needs to break out first, right? And once it breaks out, what price usually does, you see structurally, it breaks out, comes back and retests, breaks out, comes back and retests. Okay, so what I need is price to break out, come back and retest, and then go back in that direction. Okay, this stop loss is not accurate because I feel the retest can go as high as here. I feel like the retest can go really high, okay? But so if I had to come up with something, uh, this would be it. But the question is whether price is going to break out or not. I have no idea. It's hard to say. Okay. If it breaks out, that's great, but I don't know if it will break out today. Okay, there's a very good chance it will do this, and then go and retest and then come back again, like in the mid of May. Okay, but if it breaks out now, then it has come here 1 time, 2 times, 3 times, 4 times, and then it's gonna come here the 5th time, right? It's reaching here the 5th time. The question is, will it break on the 5th time or is it gonna reverse? I don't know, man. We need to wait for price to decide. Okay, if it doesn't break, then can consider doing a very risky buy. But yeah, the safer bet is to sell. Okay, all good so far. Everyone clear on how I usually get my setups. Okay, hold on. So based on what I just showed you, I already used a trend line, the channel, the horizontal levels. Now I'm gonna see if there's any chart patterns. I didn't see, I mean, I did see the descending triangle. Okay, I'm gonna pull out death and golden crosses, stochastics, RSI, and some kind of correlation. Okay, so give me a moment. Let's pull out stochastic RSI and death and golden cross. Okay, death and golden cross is just going sideways, right? You see the green? If the green is moving below the white, technically it's showing you that price is going to sell. If the green is moving above the white, it means that price is on the uptrend. The thing about this is that it's not accurate all the time and it doesn't work for sideways market, which is happening right now. So when there is a sideways market, you will see the green crossing and then crossing again the other side. So it's very uncertain, it's very unclear. This works very well for trending markets for this example. You see how this green crossed the white and it just shot up all the way. It's very nice and smooth. You see how the green crosses the white and then it just went down very smoothly. There was a fake out here, but other than that, it was pretty smooth. Okay, so I'm not going to use this too much. I'm not going to use this too much. Because the information given is not that accurate. Let me see what stochastic saying. I'm gonna pull out Ichimoku too. Yeah, Ichimoku doesn't work either on sideways market. Again, I mean, if I'm pulling this out, right? Sorry, where is it? Where is okay. This entire cheat sheet does not work well on sideways market. Okay, this is not going to work on sideways market. This is not going to work on sideways market. This is not going to work on sideways market. So this cheat sheet is not going to work on EUR/USD today or very well because EUR/USD is just going sideways, right? It's just going sideways. It's neither making higher highs or higher lows, or it's not making lower highs and lower lows either. It's just randomly moving on the sideways market. Okay, so that's not going to work and that's okay. So I think this is what's going to happen. Either it's going to do a breakout here. If it doesn't break out, then it's going to come up and retest this part. But the problem is if it retests that part, I'm not getting in for the buy. Okay, I'm just pointing this out. I'm just putting here buy or sell entry, but I personally will not get in if it's a buy because I am someone who do not trade against wave. I'm someone who goes with the wave. I go with trend. So if the trend is telling me something different from whatever, then I'm not going to trade it. Okay, so next, see, okay. ETH also kind of doing like a descending triangle kind of thing. Is it doing a descending triangle? No, it's actually doing a very nice channel. Okay, let's start with the weekly. So I've been following ETH for a very, very long time. Okay, I'm talking about like years. Okay, ETH is what made me my first bulk of money from trading. I've made well over 200,000 US dollars trading ETH. Okay, so I love this chart. Elliott wave works very well on it. For those who don't know what Elliott wave is, this is Elliott wave. So Elliott wave is basically this guy, Mr. Elliott, he noticed that charts are constantly moving in a five-wave pattern. Okay, followed after a five-wave pattern, he noticed that it moves in an ABC in the other direction. After the ABC, he noticed that it will move in a five-wave pattern again in that direction, the correct direction. So I use Elliott wave to chart a lot of ETH. I cannot show you that today because Elliott wave is not something that can be shown in a few minutes. It's gonna take a long time for me to analyze the charts using Elliott wave because Elliott wave, you need data from the start of the charts. The 1, 2, 3, 4, 5 starts from the beginning, right? With Elliott wave, you can chart the charts for years, for years. Okay, you can kind of forecast where the charts are going for years. Okay, anyways, back to this and back to using this strategy instead rather than Elliott wave. This strategy, for the purpose of today's webinar, I'm going to use this strategy to trade ETH and then we'll see what we can find out. Okay, I have multiple strategies that I trade with, but based on the webinars that I do for you guys, I use the cheat sheet because that cheat sheet is the easiest to understand for any level, beginners, whatever it is, that's the easiest to understand. Okay, so I would safely say ETH has been moving in like not the clearest uptrend, but yes, I would consider it an uptrend. Okay, I would still consider it an uptrend, not the best one, but yeah, I would consider an uptrend. So I do have a bias that ETH is going to drop a bit more first. You see how it's going in a zigzag, right? Based on my Elliott wave analysis, I'm a bit more biased that ETH is going to drop first, but not until it pulls back a bit more. So I think ETH has room to go up, but after it's done going up, then it's going to continue dropping a little bit more to kind of form like I mean, that channel didn't really work, right? To kind of form like a rectangle at the least, right? So if I get this high here and I take the low here, right? Technically, Ethereum is moving in a rectangle more than anything else. Okay, so rather than a channel. I know I want to, it's like I'm almost forcing this channel to happen, but actually, if I'm looking closely, the uptrend is really not that clear. Okay. Testing, testing. Can you guys hear me now? Okay. So let's look at the daily. Someone is saying Kai is saying bear flag on the daily charts. Bear flag on the daily charts. Let me look at the bear flag. I mean, there's a downtrend. There's a flagpole. There's a bear flag. I mean, this is a really long flag, but yeah, and then I won't say this is a very complete bear flag. I mean, yes, here, there's definitely a bear flag, right? I definitely see the bear flag here because the breakout happened here. Breakout, this is the entry level. But right now, if we're focusing on like this part, right? I would say a bear flag is forming, but it's not really completed yet. That's why when it comes to chart patterns, it's very context matters a lot, right? Like if I see a head and shoulder, right? I see a head and shoulder, for example. Okay, sorry, let me draw a better head and shoulder. But that head and shoulder does not break the neckline. Okay. For head and shoulder to work, right? This is the left shoulder, this is the right shoulder. It needs to break here, this part, the neckline. It needs to break for it to be a valid head and shoulder. If right now it comes here and then reverses, that wasn't a head and it wasn't a solid head and shoulder. So for bear flags, what it usually works is, let's say I remove this part here. Okay, let me remove this part here. Okay, this is a solid bear flag happening here. This part, this is a solid bear flag. Okay, because you can see price is moving a downtrend, like a pole is formed, and then the flag is formed, and then you see a breakout. The breakout is the entry. Okay, you enter here. Okay, this one already happened. The question now is whether where current price is right now, is it also forming another bear flag? That's the question. Okay, this is a big question. Why is it so important? Because if it really breaks out, then we're looking at a good sell, right? But if it doesn't break out, then we cannot assume it's going to drop from here. So what my Elliott wave analysis is showing that price is going to go up a bit more first before the drop, right? I think there's going to be a drop. At least that's what Elliott wave is showing me. Okay, but for my analysis, it's showing that there's a little bit of room. Okay, but now that we're on the 4 hours, I do not like the structure of charts lately. It's very, very, very neither here or there. Its trend is not clear. Okay. Since the directional bias was to sell anyways, right? The major directional bias is a sell anyways. I guess the chart's showing me that it's a sell. I will consider getting on this sell here. Yeah, I will consider getting in on this sell here. My take profit, I would want to aim here at this swing low, but that's very like far-fetched, right? That's not that it's far-fetched, but I want the trade to have a high probability of hitting the take profit. So I'm just gonna aim for here, this swing high here, the last swing high here. I think that's very reasonable on here. Okay, that's a reasonable place to aim for. If it goes down lower, yeah, that's good. Okay, but if it doesn't, then it is what it is. At least we aimed. The charts are not looking very convincingly. 1 to 2.5. That's really not like mm, mm, okay. I think to not be too safe where profit still makes sense, we can aim for lower. I don't like it, but to make it make sense because the stop loss is too much breathing room at this current point of time. I'm giving the stop loss a lot of breathing room. You guys know my style of trading, right? Usually my stop loss is super tight, but the structure won't let me play a very tight. Okay, the structure is not letting me play a very tight stop loss. Okay, the entry can be anywhere from, oh my goodness, what's happening? There you go. From here to here, right? The entry can be anywhere from here to really close to where the stop loss is. Okay, because we're talking about a range. We are talking about a range here. So the stop loss is very tight. It looks like there's a lot of breathing room for the stop loss, but I'm actually playing it very tight. Okay, so to make it make sense, I need to give it more room for the take profit. Yeah, this is the best that I can come up with at this current point of time. I know if I pull out stuff, it's not going to tell me much. Okay, this is telling me that it's a buy. I don't doubt that it's a buy. I just think that it's gonna pull back first before it goes back up. Yeah, another buy. Let me see what statistics there are saying. Yeah. Okay, guys, I spent time analyzing this, but when I pull out the indicators, so when I use this cheat sheet, right? I use everything here. I use horizontal level, channel, trend lines, whatever, right? And the other stuff that I'm pulling out, stochastics, death and golden crosses, RSI, and whatnot, is actually showing me that it's a buy, right? So although what I'm seeing is the trend line is telling me it's a sell, the indicators are telling me it's a buy. Therefore, there's conflicting information making this a low probability setup. I think it's a sell, but I personally would not get into this setup. Okay. That's okay. There are many times that I don't trade within the week. If I don't see anything promising, I don't force myself to get in for a trade. I think this is a mid probability setup. Okay. But I won't get in for the buy. Again, I want to go with trend. Okay, I don't want to go against trend. Okay, so that's all I have for you guys. Sorry, I couldn't come up with a high probability setups. It's if the markets are like that and my strategy doesn't allow it, then it doesn't work. That's why when it comes to trading, you need to come up with a strategy that works for your time frame, for the markets, for the charts that you're looking at. And sometimes it's not going to work 100% of the time. If it works 80% of the time, you already have a very good strategy. I would say you guys have been following me week after week after week. We have been getting winning trades after winning trades after winning trades week after week after week, right? So I would say this is a good strategy, but it's not good today because the charts, like I said, this works for trending markets. I'm looking at the charts and it's not exactly trending, therefore it's not going to work that well. Okay, so that's all I have for you guys this week. I hope you guys learned something from me. More importantly, you're not here to get any kind of signal from me. You are here to look at the charts from a different point of view, to see it from a different perspective. Okay, so that's all I have for you guys. I will catch you guys next week. Bye. Take care.